Hello and welcome to this week's State of the Market Update with the Sultan of Sonar. So we've had some articles come out from one Noel Perry stating that the market cannot go on this long. And I'm going to do a little bit different presentation this week on the Sonar platform. I'm kind of going to go on a little bit of a rant here just because I have to go ahead and as much respect as I have for one Noel Perry, his views, I have to counter them because there's just no sense in saying the sky is falling on repeat and creating this environment of fear when there's no reason to. I get it. There's tariffs that are going on. The trade talks are happening. The economy can't go on this long. No, it probably can't. But right now, we have no strong data to support the fact that, the freight markets and the economy are going to collapse. Yeah, eventually the sky will fall and things will come down. But you need to back up you need to have something other than like, it's gone on too long. Just because something hasn't happened before doesn't mean that it won't. So looking at our outbound tender rejection index over the last couple of weeks, it has fallen down through July. We've stated that, yes, this is totally normal for markets to somewhat stabilize in July due to the holidays, et cetera, et cetera. I'm going to move on from that, and I'm going to go ahead and just look at some of the same information. So economic indicators are really good to see general overall freight market or general economic movements. Good economy means good freight market. 4.1% was the last quarter-over-quarter percentage growth. 4.1% is considered a little high, actually. It might be a little overheated, but it's still an amazing number in terms of economic growth. So GDP is kind of the consummate number that you judge the overall economy as it stands right now. It is not a leading indicator. Nor is it really considered a lagging indicator, although it sort of is somewhat of a lagging indicator. It's considered a coincidental, I should say, indicator. So that means whatever's happening now, that's what it's measuring, except that it's measuring the second quarter numbers. So that's how much economic growth we had in the second quarter of 2018, which is phenomenal. Again, just because something is very good doesn't mean that it's going to last forever, but nor does it mean that it can't last for longer. So right now, again, coincidental indicators saying everything looks good. I'm going to pull up orders and shipments. So orders and shipments are exactly what they sound like. So they're represented in millions of dollars. They're an economic indicator that kind of shows you what demand is in the economy. And as you can tell right here, you can see that they're just trending up and up and up. So when orders outpace shipments, that means that factories cannot produce enough or get out enough shipments to supply the orders. Right now, they're kind of lining right together. So we're right on par with orders being fulfilled on the shipment side. So, but they're trending up as of June. So again, another economic indicator to look at saying things are still looking pretty good in the overall economy. I think we've talked about 2016 being a pretty soft year, and you can see that here as shipments kind of outpaced orders, and orders kind of really suffered in 2016, one of the last years that we had some softness in the economy. So one more item. So we can't talk about the overall economy without talking about oil, and I'm going to go ahead and pull up just the average price of diesel. This kind of coincides with the economy, believe it or not. Gas prices when gas prices go up, believe it or not, the economy kind of does well as well. That's because people have more money pumping into the economy. There's just more money to spend. When gas prices go down, the demand for oil and stuff you need some more demand in the economy. So you're giving people more money, but they don't have the money to spend on gas, so things go down. Also, the oil economy really has a large impact on America. So as we produce more oil, that money trickles down into the economic system. You have all sorts of things come from oil and gas. So the better that industry does in this country, the better the economy does in general. And without getting into too deep of an analysis, we can just see, look at 2016, and it trending up as gas prices go up. Freight companies actually tend to do a lot better as gas prices go up. So again, we're seeing this continued trend. It has flattened off here in the last couple of weeks. Not unusual, as things tend to peak up in the midsummer. But again, no strong indication that this is softening anytime soon. I'm going to throw up some rates real fast. So Dallas to Los Angeles. Now this is our DAT, average rate per mile index, and this is not ours. This is DAT's index, and essentially this is a measure of spot market. I pulled up the wrong one, but you can see that's a nice elevated chart there as well. So DAT VF.LAX Dow, which is a nice leading kind of, as the overall spot market moves, this one kind of follows it pretty well from what we can tell. And I went through some of this last week, but right now I'm going to zoom in and show you guys essentially we saw this bottom every August, and I'm glad some of that was up. And what happens in August? But rates tend to move back up over time. So we've hit our typical market bottom. These next few weeks are going to be telling in terms of what the overall market does moving forward. I'm going to pull up one more chart. It's going to be our tender lead time, which is the measure of when a shipper sends over an electronic tender and then they request a pickup date of 2 days later. That's a 2-day tender lead time. So over the last few weeks, and I'm going to zoom in a little bit here, you can see that actually shippers are starting to increase their tender lead times in the overall in the country. That tells me that shippers are kind of potentially thinking they need to get in front of something. So maybe they have more volume or whatnot. They anticipate people have come back from their vacation, school starting. Again, another indication that the market isn't going into this tailspin. Tariffs and all that talk are not things that happen immediately. You cannot redesign supply chains overnight. Those shipments are still coming from China. All the forecasts that we have seen are for a strong third quarter showing into fourth quarter, especially as it comes from overseas. Intermodal is still going to have a lot of movements, and rail cars are going to be moving, containers are going to be moving, freight is going to be moving. There's nothing that's telling us or giving us an indication that things are going to slow down in the next little bit. So again, let's try to stay away from the sky is falling mentality until it actually does. We need some further evidence that it's actually going to happen before we start talking about things that way. Hope I was not too optimistic for you this week, but that'll do it for this week, and have a good week.